If you're buying a house and you don't have 20% for the down payment, on a conventional loan, you're going to end up paying for PMI. What is PMI? PMI stands for Private Mortgage Insurance. Now, it's insurance that you get to pay for so that it benefits your lender. You don't get any benefit from PMI other than paying for it and the fact that the lender is going to give you a loan. When taking out a conventional mortgage and you have less than a 20% down payment, you will be also paying for PMI. There are a couple of different ways to get rid of PMI, and I'm going to let you know what those are in this video. So one way is to pay down your mortgage so you have 20% equity. So if you only put 10% down when you bought the place, but you're paying extra every month, eventually you'll get to a point where you have 20% equity and you can request your lender remove the PMI. It will probably require you to pay for an appraisal on your home, but that's okay. Pay for the appraisal when you're sure that you've reached a 20% equity and get that PMI removed. Now, this is, of course, assuming that they don't have a stipulation in the contract that says you have to pay for it for a year or 2 years or however period of time. So be sure to read the fine print if you're in a situation where you're going to want to take out the PMI earlier rather than later. Another way you can get rid of PMI is your property value go up. If your property value is increasing a lot over a year or two that you first bought your house, you could end up at 20% equity a lot sooner that way. But you're still going to need to call the lender and ask them to reassess the value by paying for an appraiser to come out and appraise your property. And hopefully that will be enough to get them to remove the PMI on your mortgage. Now, keep in mind that a lender will not automatically remove the PMI once you hit a 20% equity. So you need to stay on top of it yourself. They do have to remove it once you reach 22% of equity, but if you can do it sooner, do it sooner, because you're just wasting money every month paying it when you could get it removed sooner. How do you get the lender to reappraise your property? You need to call your mortgage servicing company and let them know that you believe that you have 20% of equity in your property now, and you would like them to order a reappraisal. Now remember, some mortgage servicers will not do it for a certain amount of time. So be sure you call and ask. Maybe it's a year, maybe it's 2 years, maybe they'll do it 6 months later if property values have increased. You're going to need to ask your specific mortgage servicer. Another way to get rid of PMI once you've reached that 20% mark is to refinance your loan if your equity is more than 20%. However, keep in mind that this could cost you quite a bit of money up front. You might end up with higher interest rates, and with a refinance, you'll also be paying for closing costs. So it might not be worth doing at all. So you really got to crunch the numbers and see what works for you. Now, if you have an FHA loan, that insurance is called MIP, or Mortgage Insurance Premium. Now, keep in mind that on an FHA loan, MIP is permanent if you put less than 10% down, or will last for 11 years if you put more than 10% down. Now, the amount will decrease as you pay down on your loan. So it's not going to be the same every month. If you do pay extra on your mortgage, that MIP insurance will be reduced. So exactly how much does mortgage insurance cost? On an FHA loan, it's about 0.85%, or about $70 a month for every $100,000 of a loan that you take out. On a conventional mortgage, it's going to vary a little bit more. It's going to be based on your credit score, your debt to income ratio, your loan to value ratio. So it's a little bit harder to pinpoint exactly what that would be without talking to a lender. But you can estimate it could be as high as $155 a month per $100,000 of loan that you take out for a conventional mortgage. It's quite a bit of money. Now, your lender will give you the estimates for your PMI and MIP when you talk to them to apply for a loan. But if you want to just check out some calculators to see if you can figure out a rough estimate, I'll link a couple calculators in the description below. I hope this video helped you understand a little bit better about mortgage insurance. If you have any questions, if you're looking to buy a house, if you need to talk to your real estate agent, feel free to give me a call. All my contact information is in the description below, and I'll see you in the next video.